Welcome to the Knakal News Network. Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hi, I'm Jon Hageman, Sales Team Manager for Massey Knakal. Welcome to the Knakal News Network. Today I'm here with Bob Knakal, Chairman of Massey Knakal, and today I'm talking with Bob about the property sales market in the first half of 2013. Bob, tell us about the market the first half of the year.
The market really performed well relative to how we expected it to. Clearly the property sales market has outperformed the broader economy and is actually doing much better than underlying fundamentals would dictate it should be doing. And a big part of that is because interest rates have stayed so low.
In terms of total volume of sales, what do we see in the first half of the year?
Well, with respect to dollar volume, we had about $13.3 billion in sales activity in the first half of the year. That's on pace to be about 35% lower than the $41 billion that we had last year. But we expect that that activity will pick up significantly in the second half of the year because there are a lot of very large transactions that are under contract presently, and new properties have just come to the market that are very, very large.
And what about the number of buildings sold in the first half of 2013?
Well, Hags, as you know, the number of buildings sold, we think, is much more indicative of market activity because large sales can skew that dollar volume. But in the first half of the year, we had 1,343 properties sell, so we're on pace for about 34% reduction in the number of properties sold relative to last year.
And what about in terms of the larger property sales?
No, larger properties have been coming to market. We mentioned that last year was an anomaly. Large office buildings weren't selling. We had the largest sale last year was the sale of the Kings Plaza Mall in Brooklyn for $750 million. There were no billion-dollar sales last year. We've already seen several of those close, so we expect to see the traction in that market really pick up.
What are you seeing are the strongest performing sectors of the market right now?
Clearly, land is on fire. The land market has escalated. Multifamily properties are doing extraordinarily well, as is retail. So those three property types are really leading the pack.
Bob, you mentioned land specifically. What's happening in the other sectors with value?
Well, interestingly, value is not performing as you would expect. If you look at total value in the first half of the year, we're running at about $470 per square foot, which is identical to what it was last year, but clearly value is increasing. So we think what's happened in the first half of the year is that a lower quality property was selling. We don't think that's indicative of what's really happening in the market.
And what do you expect to see in the second half of this year?
Well, second half of the year, we expect to see values continue to move upward. We expect to see those larger property transactions occur. And we also think the number of buildings sold will increase.
And Bob, what are the tailwinds and headwinds affecting the market right now?
Tailwinds that are helping the market are the low interest rates that we have that we're hoping stay with us for a while, the extraordinary demand that exists in the marketplace. There's tremendous liquidity because there are so many banks that are willing to lend. The headwinds the market faces are the fact that rates seem to be very volatile. We don't know if they're going to stay low. We've also seen real estate taxes increasing very significantly, and also the fact that we're 4 or 5 years into this recovery. Typically recoveries are about 7 years, so the question is, what inning in the game are we? In summary, in the first half of 2013, the dollar volume and number of properties sold were running at about 35% below 2012 levels. While average prices have maintained the levels seen in 2012, based on properties that are under contract due to close in the second half of the year, we expect to see values increasing very substantially. Land and multifamily properties have led the way, and we anticipate more activity in the second half of the year.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.